Good day, guys. Welcome back to another lesson. I hope you guys are doing good. So this is going to be our first lesson where we're going to be telling you what is Forex and also showing you, explaining to you some of the things that you're going to be using and who participate in the market, right? So on my first slide, why trade Forex, right? These are the few reasons why a lot of people trade Forex, and I'm sure these are few some of the reasons why you're also like you want to learn how to trade Forex, right? So point number one, freedom, right? When you are successful in Forex, you have freedom, right? Financial freedom, like freedom to do anything you want, you know. And then point number two, you can work from anywhere, which is also part of freedom. All you need is your phone and internet. You know, that's a nice thing about Forex. And then the market is open 24/5, which means it opens 24 hours a day and 5 days a week, right? From Monday to Friday. On a weekend, you're still free. You are your own boss, so you don't report to anyone before you take any trades. You don't report to anyone when to close the trades. You don't report to anyone on how much you can make or how much you can lose, you know. But then you need to have a plan on your own, because now you will have to be responsible because you are your own boss, right? And then fund your business and goals. So some of the reasons why a lot of people trade Forex is because they would like to fund their business and goals, right? So for example, if you want to start a clothing company, right? So instead of looking for investors to invest in you, what you can do is you can start like trade Forex. And then once you have made the funds and then pay all of your debt if you have one, and then you just fund your business, you know, like buy everything you need. And then that is going to give you an advantage to be the owner, 100% owner of the business with no investments, you know. So those are one of the reasons why these are one of the reasons why you are trading Forex. I'm sure there's more depending on different goals that we have. So let's move to the next slide. So what is Forex, right? So in simple words, Forex is a global financial market that allows one to trade currencies, right? So I'm going to give you guys an example of what I mean when I say currency, how to trade currencies. So let's say if you're going to another country, when you get there, let's say if you're coming from South Africa where you use a rand, when you go to the US, they use dollars. So when you get there, you will need to sell your rand, and you will need to buy the dollars using rands so that you can be able to buy in the US. So that's one of the examples, but I'm going to quickly do some calculations with you guys so that you can get an idea of how these things work, right? And then okay, I didn't mention that when you travel, if you have traveled the country, you usually had to find the currency exchange booth at the airport. That's where you buy your currencies in the country that you're at. So if you go to Europe, that means when you get to the airport, you go to the forex exchange booth where you can buy the euros so that you can be able to spend in Europe, right? So if you go to Nigeria, you will have to go to the exchange so that you can buy the naira so that you can be able to spend in Nigeria, right? So it's these changes in the exchange rate that allow you to make money in the forex exchange market, right? So what do I mean by that? So before I show you that example, let me just quickly explain this. So the foreign exchange market looks absolutely ginormous. I don't know the word, but what this means is that the forex market is huge, right? So in a day, there's about 6.6 trillion. That's like traded volume in the market, right? So 6.6 trillion, that's the money floating in the forex market every day. You know, that's around there. It's not exactly like 6.3, but it's around there. You know, 6.5, 6 trillion and something like that. But there's about 6.6 trillion a day, right? So when you trade the market, just because there's 6.6 trillion, don't try to make a million in a day. Don't try to make six figures in a day. You know, like learn your way up until you get enough funds so that you can be able to take those risks. Because remember, out of the 6.6 trillion, some are making money, some are losing money. So that's money coming from someone else going to someone else because it's a forex market, right? So you need to like stick to your plan, stick to your rules, and just know that every day there's a 6.6 trillion that you're gonna have a chance to trade in. right? So don't rush the process. So the forex market, as I mentioned in the previous slide, is open 24 hours a day and 5 days a week. So on the weekends the market is closed. So you can't trade on weekend. You're gonna be able only to trade on a during the week, which is gonna be from Monday to Friday, right? So let me quickly show you this example that I said I'm gonna quickly show you guys. Just get my tools here. I will use this one. Let's draw. Okay, it's gonna be red. So let's say I want to use an example from, because I'm in South Africa. So I'm gonna use an example using the rand and the dollar, right? So let's say the dollar cost about, so let's say this is today, right? So let's say the dollar cost about 11 rand today. Wait, can't I just see the text? Yeah. So let's say the dollar, $1 equals 11 rand, right? Slash date. What's the date today? 2809. 2809, right? And then let's say you have 60,000 rands, and then you go into the US. Just make Cesar. So those are not based in South Africa. So this is a South African currency. And then the US, as everyone knows already, is the US dollar, right? Okay, so now, sorry, let me just do this. So now we have this, let me just get my error there quickly. So now today's market exchange price for the dollar is 11 rand, right? And then we are planning on going to the US, and then we currently have 60K to spend in the US, right? So what we're going to do is we're going to calculate how much we are going to get when we convert our 60,000 rands into dollars, right? So now we're going to calculate how much we are going to get, and then how much are we going to be willing to spend in the US, right? So now let's do these calculations quickly. So just want to first write everything down so that when I explain it, you guys can like easily catch up. So let's say we're going to the US, right? So we're going to the US, and then so it's gonna be like 60,000 rands, and then times that by, oh sorry, we divide with divide that by 11 rand, because $1 costs 11 rand, right? So how much do we get? Let me just quickly do this. Sorry, man. Just get my calculator there. So it's gonna be 60,000 rands divided by 11. So that gives us, oops, there we go. There we go. Sorry. So this gives us 5,454. Let me just round that over to $55. to spend in the US. So now let me explain this before I continue. So the dollar cost 11 Rand each, right, in today's date, right? And then we currently have 60,000 Rands in our bank account, and then we're going to the US, right? So when we get to the US and then we arrive at the airport and then we go to the forex exchange booth, to the forex exchange booth where you buy and sell the currencies, like to convert your money, right? So when we get there, what we do is we say, okay, cool, we have 60,000 Rands, and then we would like to buy the dollars so that we can be able to spend in the US, right? What the teller is going to do is they're going to convert using the current exchange price, which is how much? Which is 11 Rand, right? This is the current exchange price that they're going to use to calculate and see how much how much dollars you can buy with 60K, right? So once the teller is calculated and saw that, okay, cool, with 60K at the current exchange price, you can get $5,455, right? And then they're going to give you that amount when you pay 60K, right? So now you have how much? You have $5,455 to spend in the US, right? So that's how much you have to spend in the US. So now let's say you stay there for a week, right? You stay there for a week, you come back on the, let's after, I'm just gonna put a random date. So let's say on the 1st of October, you come back. Just know, guys, this is just a random date, on the 1st of October, which is the 10th. And then when you come back, $1, let's do this, $1 equals 15 Rand. And then you have how much? You have 5,455, $5,455. So in this example, right? So you go to the US and then you buy the dollars, assuming that you will have money to spend. Assuming that you will spend that money, sorry, assuming that you will spend that money in the US. But then when you get there, your friend tells you that, now don't worry, what I'm gonna do is I'm gonna spend mine. Everything's gonna be paid up by me. Don't worry, save your money, and then okay, cool. And then you save your $5,455. You stay there for a week, accommodation is paid up, everything is paid up, traveling and stuff like that is paid up. So you end up not spending a penny on the money, right? So what you do is you come back to South Africa after a week, and then when you come back, the dollar is how much? The dollar at the current exchange price is 15. Let me just quickly do this. There we go. So when you come back in SA, the dollar at the current exchange price costs 15 Rand per dollar. In your pocket, you have $5,450, and then the current exchange price is how much? Is 15 Rand per dollar, right? So now what we're going to do is when you land at South African airport, you need to go where? You need to go to the exchange booth, because now you can't spend the dollars in South Africa. You need to exchange it to the rands so that you can be able to spend that money. So what you do is you go to the booth and then you say, I have $455, and I would like to buy rands. So what the teller will do is they will check the current exchange price and then times times that amount by the current exchange price, which is 15 rands, right? And then let's calculate and see how much. Let's see how much we have there. So it's going to be 5,455 times 15 rands, and then we get 81. So now when you land at South Africa after a week, you have 81,825 rands in your pocket, right? And then what we can do here is we're going to minus 60K. And then let's minus 60,000. And then you have 21,825 profit. Right? So let me just do this recap again so that we can understand. So on this day, you were going to the US, right? You had 60K in your pocket, and then you told yourself that you're going to spend all that money in the US, right? And then the day you arrive at the airport in the US, the dollar cost 1 rand each. Oh, sorry, 11 rand each, right? And then with your 60K, the teller calculated that, okay, cool, with 60K at the current price, which is 11 rand, you can get $5,455, right, to spend in the US. So cool, you buy the dollars, and then you go to your friend's apartment or place. And then when you get there, your friends say, cool, don't worry, I will pay for everything. I will pay for accommodation. I will pay for the food. I will pay for everything. You can save your money, and then you can just spend it when you get back home, right? And then when you come back after a week or so, at this day, the current exchange price for the dollar and the rand, $1 costs 15 rand, right? So what do? You go to the teller and then you tell them, okay, cool, I'm coming from the US, and then I have the US dollars. So I would like to sell these dollars so that I can be able to spend my money in South Africa using rands. So what do? The teller then do what? The teller then check the current exchange price for the dollar, which is 15 rand per dollar. And then what does the teller do? They then times for how many dollars you have by the amount, by the current exchange price, and then you get 81,850. 81,825, right? And then remember that when you left South Africa, you had 60K, right? But then now when you come back with the same 60K that you had, when you sell it back, when you sell it back, when you sell the dollars to get back your 60K, and then when you get to the teller, you get now the dollar has increased. It's no longer 11 rand. It now costs 15 rand per dollar. And then you have $5,455. And then when you sell those dollars, you end up getting 81,000. So that's why you end up with 81,000. So meaning that out of that out of those 5,455, you managed to make a profit of how much? Of 21,000 rands, right? So this is where it's these changes in the exchange rates that allow you to make money in the foreign market exchange, right? So this is how you make money. So you don't have to trade in order to make money in the forex market, right? You can travel around the world, and then without even noticing, the currency exchange just increases while you have your dollars in your pocket or you have your euros in your pocket. But then when you go to a country that has is weaker than the other currency, you end up having more money in that country because now the currency is weaker. Because now remember, when we were leaving SA, the dollar was a bit weaker, you know, the dollar was weaker, which was 11 Rand. And then when we come back, the dollar is strong, now cost 15 Rand, right? So you buying at a lower price. So this is going to be 11 Rand. And then the market goes up. And then now this is 15 Rand, right? So we bought at 11 Rand, which was here. And then we travel. After a week, when we come back, the dollar is strong and then it's currently at 15 Rand. And now this is where we decide to sell our dollars because now we want to use that money. And then when you sell at a higher price, right? This is where now you make your profit, which is the difference between 11 and 15, right? Hope guys are getting it now, right? So you don't have to trade. You don't have to trade in order to participate in the forex market. Like, so people that are traveling, they're also like participating in the market. That's why there's about 6.6 trillion money that's spent in the market, right? Every day is because there's people traveling, there's goods and services that be bought from different countries. So those small exchange rates, they make a difference in the market, right? So let me make another example. Let me make another example. Did I mention something here? Okay, yeah. If you think one currency will be stronger versus the other and you end up correct, then you can make profit. In this example, you are just a tourist. You didn't know that the dollar is going to be stronger when you come back. You just had your 60K and you travel, right? But I'm just using this example just to show you that even though you don't know, but sometimes when you come back from a certain country, you can play around with these things. Just to like, okay, cool. When I bought my dollars, they were this amount. I currently have like $20 now, and it's currently 15 Rand. Let me just like keep it in my pocket until maybe $1 is 20 Rand. And then when you go to the bank, you are gonna get your profit. But let me just quickly make another example quickly, and then we can move on to the next slide. Clear all drawings. Okay. So in this example, I'm gonna be using the bank, right? The banks. Now you are not a now you're not a tourist. You are a an investor, right? Investor one. We have 500. Let me just do this one here. Investor two. Also has 500. Okay. So at the current state, the dollar cost about $1 equals, let's use the same example that we use, 11 Rand, right? And then let me just put the date. Okay, let's use another date, 15-09. I'm just using random dates, guys. So don't take the dates, but just look at it. Just look at the examples that I'm making, and then let's say after this day, the banks also like tell us now that prices change. Now the dollar costs about 7 Rand. Now let's say now this is about on the 20th, a week or so. I'm not saying that a different change in the market is being made in a week. You know, it can be made every day, 2 days, 3 days, you know. So there's always a small change. But as you guys learn with us, you're gonna notice that every day there's a small change in the market. So that and those are the changes that we take advantage of. But for now, I'm just giving you the basic of how everyone around the world is trading the market, you know. So let's do this, and then now $1, and then now cost 16. The date is the 21st of September 09. Yeah, let me just do this. Put it here. There we go. This is the first day where we both. I'm just gonna put the dates quickly, and then okay, I'm just gonna leave that. Yeah, need to put something there. So on this day, should have done a copy and paste there, but it's fine. Let's just continue. Okay. So in this example, what we have two people, we have two investors, right? Oh, insert. Let me just quickly fix this spelling error here. Investor. Okay, cool. So now, in this example, we have two investors, right? So investor one is me, investor two is you, right? So on the 15th, oh, sorry, on the 15th, oh yeah, on the 15th of September, we watch the news, because normally these things, if you don't have the internet, you can always watch the news, and then every day they do tell you what is the exchange price of the currency and that currency, the pound, the yen, the Chinese, and whatever. So so we go to the bank, right? After we watch the news, tomorrow we go to the bank. We saw that, okay, cool. The rand, the dollar is currently floating at 11 rand per dollar, right? Which is cheaper than normally the price that we normally see in the news. So now we see it that is on 11 rand. What do? We have 500 each. We don't even tell each other that, but I'm just making an example, and then we go to the bank, right? And then when we get to the bank, we go to buy our money. We go to buy dollars using our 500, right? Which will be investing 500 into dollars so that we can make profit, right? So now let me get to my calculations. So 500 divided by 11. So this means we're going to get 45.45. Let me round it off. $45, right? Because we're gonna get like hard cash in dollars. So we get $45 each. And this is on the 15th of September, right? So after a week, we watch the news, and then we see that, okay, cool, now the dollar is weak, has lost strength, is weak, and now it's even cheaper than the price that we bought at, right? Now the dollar on the 20 years cost how much? 7 rand per dollar. It's even cheaper than what we bought it at, right? What I do is, as investor one, I panic, and then I go sell my dollars, right? I panic, and then let me just put the date, 20th 09. After watching the news, I panic, and then I go sell my dollars. So now, which means what's gonna happen is gonna be 45 times 7 rand. Now let's see how much I'm going to get. So 45 times 7 rand, and now I'm going to get 315, right? So I'm going to get 315 rands when I sell my dollars, right? Why am I not getting my 500 back? Is because when I go and bought these dollars at this day, this was the current exchange price, right? This was the currency exchange price, right? And whatever the currency exchange price was at that day, that's how many dollars I got on that day, right? No matter how much I put in at that day, that's how much money I got, right? So now, after watching the news, then I saw that the dollar is losing strength. Now it's weak, right? And then I panic, and then I take my dollars out of my safe, and then I run to the bank, and then I go sell them. Then I tell the banker, look, I have these dollars, and I want to sell them now, right? The banker, what they will do is they will look at the current exchange price, right? Which is 7 rand. And then they're going to buy those dollars from you at that amount, which is how much? 7 rand, right? You can't say to the bank that, no, I bought them. The last time when I bought these, I bought them at 11 rand. No, doesn't work like that. The current exchange price on the day that you go to the bank is what the bank is going to buy or sell those dollars to you, right? If you go to the bank when the market, when the dollar costs 7 rand, they're going to sell you those dollars at that price. But then if you go to sell your dollars at that on that day, they're gonna do the same. They're gonna buy those dollars at that price, right? So I panic and then I go to the bank because I saw now the dollar is losing strength, it's becoming weak. What I do is I go to the bank and then I tell them that cool, I have $45 and I would like to sell them because I'm panicking. I see that the dollar is losing, so I don't want to lose all my money, you know, and because you don't know where the market is going. So what I do is I go to the bank and then I sell my $45, and then the bank give me how much? They give me 315 because that's what the current exchange price is at the day, right? That's the only thing they're focusing on. On that day, that's what that's what the current exchange price is. So that's what I'm going to get on that day. There's no there's no negotiations, nothing, right? That's what the market look that's what the price is, and then that's what I'm going to get, nothing else, nothing more, nothing less, right? So how much did I lose? 500 minus 315 equals, let's see, 500 minus 315, 185. So that means out of my initial investment, I lost about 150 rands. I didn't make any profit. So this is how much I lost because I invested 500, and now because I panicked and I went to sell my dollars, and now I'm left with 300, and this leaves me at a balance of minus, let's say, is it? No, wait, it's not a negative. Yeah, negative because it didn't make profits. So we're down by 185. So this is a negative 185. So that's how much you lost, right, on this investment, right? So now let me make another example. So I close my investment on the 20th, and then investor B, which is you, investor 2, which is you, decided to like not to go to the bank when price was dropping, and then just waited for more days, right? And then what did price do? And then price just went up on the 25, and then it was 16 rand per dollar on this day. 16 rand per dollar. And then you then go to the bank and say to the teller, I have $45 and then I would like to sell them at the current price. And then when they check the current price, it's 16 rand per dollar. What the teller is going to do now is gonna say 45 times 16 rand. So this means now you are going to get 720 and then 500. I'm sorry, let's say 720 minus 500. That leaves us with 220. The date is the 25th or 9. Let me just put it there. There we go. Sorry. So let me show you now this example. So here we bought it the same day, which was on the 15th, and then price was at how much? 11 rand, right? But then I panicked, and then on the 20th, and then I closed all my investment, right? And then I end up losing 185 rand, right? And then investor B, which is you waited, right? And then when you waited, and when you check on the 25th of September, you see that prices went up to 16 rand, right? So now each dollar cost about 16 rand. So what do? You went to the bank and then you told the bank that, hey, I have $45 and then I would like to sell them now at the current price. So the bank teller will look at the current exchange price for the dollar and see that, okay, cool, it's 16 rand today. So how much do you have? 45. And then they're going to times that $45 by the current exchange price, which is 16 rand. And then you get your money, right? And then you get 720, meaning that from your initial investment, which was 500, you made a profit of how much? Of 220, right? You made a profit of how much? 220. So this example compared to the other one is kind of similar, but on the other one, you were traveling to another country, but now you just went to the bank and then you bought the dollars and then you kept them at your house, right? And then you just watch the news, and then whenever you felt like, okay, cool, the price has gone up, so now you can go in and sell the dollars again. And then that's where, depending on the decision you made and when you make the decision, is going to be the results of your investment, right? So for example, investor one, which was me, I panicked and then I decided to go sell my dollars, and this day when price was low, and what did happen? I end up losing, right? So investor B just waited for the market, for price to go up again, and then when price was at 16, and then what, they went to the bank and sell their dollars. We both had 500, $45, $45, and then we bought it the same day. But then depending on when you go to sell those dollars, those are going to be the decision that are different to each other. So that's why investor two, you end up having a profit because you waited until price went up. And then because I panicked, that's why I end up with a loss, right? So if you think one currency will be stronger versus the other and you end up correct, then you can make profit, right? So investor two, when you bought the dollars, you knew that the dollar is going to get strength, right? So that's why when you saw this, you didn't panic, you waited, right, until the dollar can strength, and the dollar did, and then you made your money, which is profit of 220. But then investor one, I thought the dollar was going to be strong, But then when I see it going down, I panicked and then I went to the bank and then I sold. And then that's why I made a loss, right? And then, sorry, it's these exchanges, it's these changes in the exchange rates that allow you to make money in the foreign exchange market, right? So the difference between the price you bought at and the price you sell at, this is going to determine if you're going to make money or not, right? We both bought at 11 Rand, but I closed at 7 Rand, and then you decided to close at 16 Rand, right? Obviously, I will make a loss because I closed at a lower price than the price that I bought at. Obviously, you are going to make money because you close at a higher price than the price you bought at, right? Which is the changes in the exchange rates that allow you to make money, right? This is how this is how forex work, right? This is just the basic way of how forex work. This is how it's been working for years, and it still works even today, right? This is how it still works even today. You can just buy the dollars, keep them in your safe, and then forget about them, and then whenever you see the price went up, then you can go and sell them, right? But those are long-term investments. They're not something that you're gonna buy this week and then wait for next week to go like and change it, because sometimes the price might go down for the whole month, from 11 Rand to 5 Rand for the whole month, and then maybe after 2 months come back, gain strength, and then go to 16. Do you understand? So those are more like long-term investments, but these are but at the same time, this is how forex work. you know this is how it works. Price just go down and up. You just need to know when to buy and when to sell, right? So when you look at this example, so the first example, we bought at 11 Rand and then we close at 16, right? But now in this example, price is going, we bought at 11 Rand and then price came back. Let me just do this. So this is 11. Let me use, oopsie. So here, now it looks better. So we bought at 11 Rand. Just change the color to blue. So we bought at 11 Rand, which is this. Geez. Okay, at this tip, it was 11 Rand, right? This is where we bought at. And then price moved down. And then this is where price was at 7 Rand, right? This is where we bought. I panicked and then I closed here when price was going down, right? But then investor two didn't panic, right? They just kept on holding their investment, and then price just continue pushing back up. And now this is at 16 Rand, and this is where they closed, right? So if they didn't close there, price might have went back down to 13 Rand, and then if they closed there, they would have got lesser than 250, right? But then they closed at 16. So if I bought here again, after seeing that share bet, after seeing that price went up to 16 Rand, and then I missed this opportunity because now I closed here, and then I come and buy at 13 Rand, which is gonna be here, and then I hold my investment, and then I close at let's say 18 rand. So this means that from here to here, the difference and changes in exchange rate is going to be my profit, right? So from here to here, the difference was my loss because I didn't make any profit, right? So the market moves up and down. The market moves up and down, right? The market moves up and down. So just that's something that you need to know. Keep that in mind. We're going to be talking about that a lot. The market moves up and down, right? So this is these are the two examples that I can show you, how forex works, and how you can invest in forex and how you make money in forex. So you can make money by just traveling without even knowing that you are trading. Because when you come back and then you buy another currency using your one, that means you are trading your currency to get another currency. Understand? So when you go buy the dollars at the bank and then you keep them in your house, you are trading the rands for another currency. Understand? So it's more like the same as the traditional way back in the days where people used to trade the livestock. Give me your cow, I will give you my sheep. Give me that, I will give you that you know so this is the same thing you know and then let's move on to the next one. If you have any questions, you can just send us a DM on Discord, and then we will just help you guys where you need help. So just to recap, so what is forex? It's a global financial market that allows you to trade currencies, right? If you think one currency is going to be stronger than the other, then you're going to make profit, right? And then normally people before the pandemic used to travel, but now things are also going back to normal, where you travel and then when you get to the airport, you will find a booth where you can buy the currency of that country, and then by selling your wait, but yeah, you're gonna buy the currency of that country using your currency, you know, and then the changes that are made. The small changes in exchange rates allows you to make money in the forex exchange market, right? So they allow you to make money, they allow you to lose money based on the decision that you take, right? So that I just need to explain that. That's why I wanted to show you guys that the example of the investor one, investor two, and then always remember there's about 6.6 trillion a day in the market, plus minus around there every day. Even those $3 trillion a day. That's a lot. You are not even 1% of that money. You understand? Or the people that are in the market. So always make sure that you don't rush the process. Like keep your cool, stay calm. Every day you're gonna get an opportunity because there's always money floating in the market, right? So remember, the market is open 24 hours a day and then 5 days a week. Now, only closes during the weekend. Now, let's continue. Just make sure you always have a glass of water next to you. Okay, who participates in the market, right? So the government. The government participates in the market. They are the big dogs in the market, right? Because now elections shake the market, political decisions shake the market. So if you can go back to the charts and look at when Jacob Zuma was the president, and then he used to shuffle the cabinet midnight. When you wake up in the morning, you just see that the rand skyrocket to the downside and up, keep on fluctuating. Tomorrow it's weak, the next day, the next month it's strong, you know, based on the decision that are being taken by the president. And then also based on the decision that are being taken by the what is this called? The Reserve Bank's chairpersons, right? So the government are the big players in the market. So whatever they say doesn't control where the market must go, but it affects the market, right? It affects the market. Whatever the government say, it affects the market. It's either going to be in a negative way or in a positive way, right? So those are the things that we are going to show you, like in terms of fundamentals, where to find the news and stuff like that. And then traders. So this is us, right? This is us. We are not even 1%. The amount of money that we put in, maybe now we are, because I see there's a lot of traders current now. So we might be 1% by now, the money that we are putting in the market. But this is us. We are risk takers. We are our own boss, you know. And then we don't make our money fast, but we make our money at our own time, you know, based on what the market is showing us, based on what the market is giving us, right? So traders, this is us. Investment hedge funds, you know, these are companies that invest for big people, you know, like people that don't want to be seen, who wants people to trade for them. You know, the hedge funds, the ones that deal with millions and millions of risk every day, you know, not just $1 million, maybe like $50 million a day, you know. So those are the hedge funds. So high skilled investors, and then they have like a lot of opportunities in the market, you know, same as us. Everyone has a lot of opportunity in the market, but they have more money to risk with, you know. So yeah, and then corporations. So these are the companies, you know, like for your insurance company, your banks, you know, all of these companies that the corporate companies. They also like participate in the forex market. Some of them sell goods to another country, and then so they have to buy certain currencies to keep, so that when it's time to buy the, what you call this, to buy the manufacture, or what is it, goods from the manufacturer from another country, at least they bought the currency at a cheaper price, and then they keep them to themselves, you know, so that when it's time to buy those goods they need, at least they won't be expensive because they already bought the currencies at a cheaper price, you know. So those are your clothing brands. So they do these behind the scenes. And then central banks. So these are your Feds, your Bank of Japan. Sorry guys, my dog is barking. These are your Bank of Japan, and then your Bank of England, Bank of China, the Feds, which is in the US, South African Reserve Bank. I think that's the one. Yeah. And then is SRB. Yeah, Reserve Bank. Yeah, that's the one in SA. And yeah, there's a lot in each and every country. So the president of each, or the chairperson or the CEO or whoever he, is in charge of the bank, normally they do go out like to tell the country, you know, about the interest rate and how the economy looks like, the inflation, you know, the budget of the economy and stuff like that for the specific countries. So those things also do affect the market, especially for the currency of that country. You know, we are going to show you guys where to look at those things, and then who are the people for those things, so that you can pay attention when they are about to speak, because a lot of things can happen during the market when those individuals are speaking, right? Your commercial banks are your JP Morgans, your Capitec, your ABSA, your Barclays, you know, the Barclays Group, your Standard Bank, your, what's this banks from the US, JP Morgan, and I forgot the other ones, you know. And yeah, those are all the banks that participate in the market. So this is everyone that participate in the forex market, right? So you are not alone, right? You are not alone, but just stick to your plan and then focus on yourself, and then everything will work out. Don't focus on what are they trading, what are they trading, what are they trading, what are they trading, what are they trading. Just focus on those that are going to be sharing information that's going to affect the market, so that you can use that to your advantage, right? And yeah, let me just move on to the next slide. So the types of market that can be traded. Types of market that can be traded. Forex market. This is the one that we're going to be mainly focusing on. This is the one that we're going to be like, this is going to be our daily bread. And then the stock market, where you buy your shares and sell your shares, you know, you hold shares and stuff like that. So here we're going to be looking at indices in terms of this. So we're not going to be buying and selling shares, but we're going to be looking at indices that consist of all the shares, not all of the shares, but mostly the top traded shares. So this is the market that we're going to be trading. And then your options, this is the securities for the shares and stuff like that. EFT, I think it's EFT, yeah. So we're not going to be looking at this. And then your crypto, this is something that we are going to be looking at. So this normally we look at a long-term investment, right? We look this at a long-term investment. Yes, we can trade it every day, right? But at the moment, we are currently looking at this at a long-term investment, right? So these are the top 3 market that we're going to be looking at: forex market, stock market, and the crypto market, right? And yeah, so guys, this is it for this lesson. And then please make sure that you watch this, and then if you don't understand, just rewatch the video, and then if you have questions, send us a DM on Discord, and then we are gonna be there for you. I'm gonna see you guys on the next one. Cheers.